Oh, hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold in front of us, and as you can see, that there is not much volatility in the market right now. Yesterday it was US bank holiday. As a result, market was mostly silent, and we can still see that market is silent only. Gold is standing at 2049. So if you have any sell position right now, ongoing sell position, you can be on the trade because you can see that market is going down and you can expect few more pips from your current sell position. But on the other hand, if you have a buy position, you need to be a little bit careful because you can see that market has lost the momentum, market has lost the strength with which it was going up. When there was an airstrike by US and UK on Yemen, okay, market considered it as a war sign, as a result of which market started going up, gold started going up. But with the market opening, we saw that market mostly digested the news that nothing is going to happen, and as a result we saw softness on gold, and the softness is still continuing. So the trading opportunities that we discussed in our previous videos on Saturday yesterday are still very much valid. Means if you see gold going up, then the best resistance on the chart of gold is still around 2080, and I don't think so market will have the strength right now to go towards 2080 until and unless a big news comes out. 2080, 2072 is a big range of sellers in the market, and before that we also have resistance around 2061 to 2065, the level from where market reverse here. And if gold breaks 2065 level, gold breaks this level here, day traders can consider it as a trend continuation, and you can look for a buy position at 65 and exit around 70. Okay, so these are the trading opportunities in front of us right now. But right now gold is standing at 2049 and the levels are far away from the current market price. So if gold drops, then the best level is around 2037 to 2040 that we discussed yesterday also. And this level is still very much valid. If gold drops, observe the market around this area. If you see market taking support as a day trader, we can look for a buy position. And if you're a swing trader, okay, then I think it's better to be on the side right now because still we can see that we do not have a clear direction in the market. If we look at the overall chart, the market was a downtrend. We have trend reversal signs. The structure of the market has changed. So as a day trader, you may play both the sides, but as a swing trader, your positions last for a couple of days. So as a result, you need to have a clear direction, and which we don't have right now. So the best support for day traders is still around 2040, 2037 if market drops. And before that, you can also see that I have also marked 2043 as well. 2043 to 2041 is also a support on the chart of gold, but not very strong. Okay, not very strong. Let me show you why. See here, as the trend of the market is reversed, we are considering Fibo here again. So we can see at 2037 2039 area we have Fibo 50% retracement level. We have the moving averages working as dynamic support. The previous resistance are working as support here. So 2037 2038 39 is a good level, but around 2043 this was the level where market bounced previously. Okay, so if the volatility of the market is not very high, if you see market is coming down with small red candles, selling pressure is low, as a day trader you can also look for a trading opportunity here as well. Okay, so these are the trading opportunities in front of us right now. The rest of the levels like 2000 level, 1980 are far away, so no point of discussing the levels. So right now let's keep our eyes on these levels. And sadly the market is still very slow. Usually, okay, usually December is a slow month, January is a slow month, but this year, okay, this year December was really surprising. December was very volatile. The month of December gave plenty of opportunities to traders till Christmas. and usually the first week of January is silent, low volatile, and market usually picks momentum by the second week. But this time we can see that the half of January is over and market is still silent. Market is still not showing much volatility. Market is still not giving enough trading opportunities to traders. So in the pro trader group also today I updated that if you are unable to find good trading opportunities, do not push yourself. Do not overtrade. Okay, do not try too hard, because if your analysis is saying that it is better to wait, then you need to wait right now. If you're a trader, that doesn't mean that you need to trade each and every day. A trader only trades when the opportunity is right. We are traders, not gamblers. So it is better to wait and watch. It is better to wait for the right opportunity instead of losing money in the market, instead of taking a bad position and being stuck. Okay, so let's wait and watch. When the market will give us a clear direction, we will try to strike hard so that okay, we can recover everything. Okay, so nothing much to discuss right now, and this is all about the market. Okay, in fact, if you look at the Euro USD and GBP USD also, you will see a similar story. Okay, if I take you to news, you can see gold slips as dollar treasury yields gain. Gold fell slightly on Tuesday as the US dollar and treasury yields jumped, with investors awaiting comments from a host of Federal Reserve speakers. Not important at all. Okay, not at all important. Okay. If I take you to DXY, you can see that DXY, yes, DXY is showing some volatility. DXY is going up, but DXY is still trading inside the range only. You can see DXY is still trading inside the range. We need DXY trading above 103.20. Then only we will get to see some selling pressure on gold. We will get to see Euro USD breaking outside, uh, trading below the range. So we need some sort of action in the market right now. And if DXY breaks 103.20, it will head towards 104 to 104.50. And to have a trend reversal, we need DXY trading above 104.50. And right now, I don't think so DXY will have the strength or capacity to break 104.50. If DXY breaks also this particular level, it will hit the level and it will face some resistance, and we may get to see a sideways market again, because the XY do not have the strength right now to break 104.50. We need a news, we need a fundamental factor. Okay, so, and right now it is missing. So I don't think so market will be exciting okay, this week. So that's all from my side, my dear friends. Thank you so much. Bye bye, take care, and enjoy the winter, enjoy the holidays. If market is not giving you time, start spending some quality and lovely time with your friends and family, okay, because they are more important. Bye bye.